என்னது
audio. Good afternoon, Ms. Radhika Pandey. I'm Nagappan here. Namaste.
Namaste.
Shall we start?
Yeah, I think we can.
Yeah, so that people will keep logging. We need not.
We should.
Okay.
Good evening, one and all. We will commence the webinar. Welcoming you all for this webinar on digital currency organized by Hindustan Chamber of Commerce. May I now call upon Mr. V. Nagapan, President, Hindustan Chamber of Commerce, to welcome the participants.
Yeah. Good afternoon, friends. It gives me immense pleasure to welcome all the participants to today's webinar on what everyone should know about digital currency or e-rupee. And this is a topic which we have been discussing since November and December, and Dr. Gauri and Chamber Secretariat and myself, and we're waiting for the right speaker, and we are lucky to get Dr. Radhika Pandey, an eminent speaker and a expert on the subject matter of the topic from NIPFP Delhi. She'll be addressing our members. It gives me immense pleasure to welcome Dr. Pandey and also all other participants for today's webinar. A few words about Hindustan Chamber of Commerce. Hindustan Chamber of Commerce started 76 years back. Today we have more than 950 members across various sectors of the industry, trade, commerce. And we have a significant presence in the social media. We do organize events on Twitter Spaces and webinars for the benefit of our members as well as for the benefit of other public from the industry. The topic asked me, in fact, I do have quite a lot of queries, and Dr. Gauri and Swaminathan Iyer also agree with me that today, in fact, I was trying to install the e-rupee app, and it was telling that I could not handle it. I don't know why. Probably Dr. Radhika Pandey will be able to answer that. Why? And it's a pilot project, and it says that it is. I'm not able to do it. So, but people have queries like when I have UPI and online electronic mode of payment. What is the need for this e-rupee? Is it in which way it is different from the other currencies? And in fact, we had the very senior banker, the managing director of a bank, addressing our members sometime in December, thanks to Swaminathan who organized the event. And more and more clarifications we get confused. So hopefully today we'll get a better clarity. And I don't want to stand between you and the speaker. I welcome one and all. Thank you.
Thank you, sir. May I now invite Mr. R. Swaminathan Iyer, Chairman, Banking and Finance Committee, Hindustan Chamber of Commerce, to give a brief about the background of this webinar.
Thank you, President, and thank you, Secretary, for that thing. And also thank Dr. Gauri Ramachandran and my co-chairman, Mr. Shamshekhar, also for organizing this event in a big way. Just to give an introduction about the what we call the theme of the seminar or the discussion. The digital age is transforming globally and particularly India at an unprecedented rate and level. Technology is providing ample opportunities to empower more and more individuals, also the organizations and countries, and hence to grow endlessly. Not one sector has been left untouched by this technological revolution. RBI has launched recently the central bank digital currency called CBDC, the wholesale marketplace. It is backed by the government, but also a legal tender. It basically aims at reducing the cost of printing the fiat currency called the physical currency, and also helps in faster transaction, including the cross-border transactions. There are direct, indirect, and hybrid system of digital currency platforms. In the CBDC situation, it is based on distributed ledger technology approach. Transaction data is encrypted and digitally signed. There is a token-based approach also in the CBDC. The real question is in this, is a digital currency an interest bearing? Because when you keep the money in the bank, you're likely to get an interest. But in a digital currency, how far this is going to be embedded is a question which I also keen to know from the speaker. And there is a crowd deployment of ledger also in the distributed ledger. There has been a lot of buzz around the concept of cryptocurrency, CBDC, and digital currency. Just wanted to let the participants know A central bank digital currency can be described as a digital form of a country's fiat currency, whereas a cryptocurrency is a digital currency which is an alternative form of payment with a unique encryption algorithm. In layman terms, a CBDC is simply a digital fiat, whereas a cryptocurrencies are digital assets on a decentralized network. The most important, finally, the cost of digital currency is not yet captured in the cost of funds of the central bank. CBDC benefits have been absorbed in the conventional banking services. Then only the profitability, the financial inclusiveness will happen. Added to this, there is something called quantum computing has taken place in a very big way globally. To my understanding, about 209 countries have signed for this. This is called the QFS system. One is curious to know, when the digital currencies are involved, how the central banks are going to operate and initiate quantitative easing as a reduction and increase in supply of digital currency will be centrally controlled. Like you all, I too eagerly await and look to hear from Mrs. Radhika Pandey. Over to the Secretary. Thank you.
Thank you, sir. May I now invite Dr. Gauri Ramachandran, Chairperson, Banking and Finance Committee, to introduce today's speakers to the audience.
Good afternoon to one and all. I have the great pleasure in introducing a tall and eminent personality, Dr. Radhika Pandey ji. She's a senior fellow at the National Institute of Public Finance and Policy. Prior to this, she taught at the National Law University, Jodhpur. Dr. Pandey was a lead coordinator for the Ministry of Finance, instituted task force on public debt and management agency. She has also worked as member of various research teams, such as for the Working Group on Foreign Investment, chaired by UK Sinha, the Finance Sector Legislative Reforms Commission, chaired by retired Judge B. N. Sri Krishna, and the report of the Committee to Review the FCCBs and Ordinary Shares through Depository Receipt Mechanism Scheme 1993, chaired by M.S. Sahu. So such a wonderful team she has been associated with and part of her talent pool. Dr. Pandey holds a PhD and MA in Economics from JNV University, Jodhpur, and BA Honours in Economics from Banaras Hindu University, Varanasi. Her research interests include business cycles, capital controls, and financial sector regulation, among others. Much sought after speaker in media on economic reforms, because even after this, she'll be just rushing for another media interview. So we'll be just privileged, and thank you so much. It's just not a rhetoric that we say that amidst your busy schedule you are here. It's really a true sense. We welcome you, and we are now over to Dr. Pandey.
Thank you. Thank you so much. Thank you for having me. And it's a wonderful privilege to discuss this important issue of digital currency. And I heard the issues and the questions you all have raised. They are all very pertinent, and there is no easy agreement or answer to these. And it's an evolving field, and many countries are experimenting with this. So hopefully we will be able to, understand some of the issues that we raised. So I'll just share my screen for the presentation.
Yes.
Is it visible?
Yeah.
Yes.
Presentation. Okay. So the outline presentation runs as follows. We'll first talk about the central bank digital currency, the definition and how it is different from cryptocurrency. We will then look at some of the motivations to issue CBDCs worldwide and also in India. Now, it's very important for this to, as a background note, the concept note that was released by the Reserve Bank of India in October, November, that is very useful to get some information about what the central bank, the Reserve Bank of India is thinking about CBDC. So some of the arguments are taken from there in the presentation. Then very important is to discuss the design features of central bank digital currency. We talked about Mr. Iyer talked about interest bearing or non-interest bearing. So what do we mean by that? what are the implications, what are the pros and cons of issuing an interest bearing or non-interest bearing or wholesale or retail CBDC, what are the other forms of central bank digital currencies, the ownership and distribution models, and some pilots on CBDCs. I mean, we talked about the wholesale pilot. The RBI also launched a pilot on retail CBDC in December 2022. So we are now one of the countries that are experimenting with CBDCs at an advanced stage. So it's important to study the implications, the design features, and rightly raise one question that, when we have such an established digital payments infrastructure in the form of UPI, the need for CBDCs. So that question is also answered by some of the discussion that have been made by the RBI governors and the people who are part of the coin and currency division at the RBI. So we'll talk about some of those. And then we'll also look at some of the cross-border transactions experiments, because one of the very interesting use case of CBDC is for easing cross-border transactions. And this is very relevant for India because India is one of the major recipient of remittances. So in that context, it's very important to analyze this use case of CBDC, which is that it can be used for cross-border transactions. So there is a very important cross-border experiment, which is called the M-Bridge project, which was done under the supervision of BIS, which is the Bank for International Settlement. So we'll talk briefly about that, and then we seek some lessons from some of the other countries that have taken a step further than us, so that we can get some learnings from their experiences on how to proceed further. So that is the basic outline of the presentation. Introduction to CBDC, as we've, I mean, some of you already talked about that it's a legal tender issued by a central bank in a digital form. So it is a legal tender, means it's issued by the central bank of the country. The only thing is that its form is different. It is not a paper currency, but it is issued in a digital form. And it is exchangeable at par with the other forms of legal tender. So it is exchangeable at par with the paper currency. And it is also accepted as a medium of payment. Whatever we understand the textbook uses of a legal tender or the textbook uses of a currency, that it is a medium of payment, it is a store of value. So all those functions are equally applicable to central bank digital currency also. In terms of its, where does it appear on the balance sheet of a central bank? It appears on the liability side, because just like notes, right now we have the currency in the form of notes and coins. Now, if CBDC is issued at a large scale, I mean, right now it is in the pilot stage. If it is issued, then it will appear at the liability side of the balance sheet, just as notes and currency notes. Now, at the very outset, it is very important to understand three foundational principles for CBDCs, for the issuance of CBDCs. And these three principles should guide the issuance of CBDCs at the very outset. So the first principle is that any issuance of CBDCs should not do harm to the existing forms, or it should not cause it should not impede the ability of central banks to perform the function that it is already doing. So, for example, in India, central bank is responsible for monetary policy, central bank is responsible for financial stability. So when it is issuing CBDCs, CBDCs should not come in its way of its regular functions that it is the central bank is performing. Second principle is that it needs to coexist with the other forms of currency, which means cash and bank deposits. Now, this is very relevant, and as we will see in the later part of the presentation, when we'll talk about interest-bearing and non-interest-bearing CBDC, the relevance of this point will become more clear. But here at this point in time, it will be sufficient to talk about this principle that all forms of legal tender money should coexist. It should not be that one harms the existence of other forms of legal tender. And then third point, very important, is that if we introduce CBDC, it should have the potential to improve the payments efficiency. It should have the potential to introduce some new forms of innovation, which currently the existing payment infrastructure may not be having. So that is very important, that if we are introducing CBDC, it should promote innovation and efficiency. So these are the three foundational principles which the Bank for International Settlement, in a paper in 2020, when at the first time countries started thinking about CBDC on a large scale, these were the three foundational principles that were laid down by the BIS. So what is the state globally? In this context, it's very important. There is a very important resource called the CBDC tracker by the Atlantic Council. So there's a website by Atlantic Council which provides a tracker on CBDC, and it tells us at which stage the CBDC projects are. So the projects, the stage could be either it is launched, or it is in pilot stage, or it is in development stage, or it is in research stage, or it is cancelled. Okay, so it can be various stages of the CBDC projects. And if we compare the situation in 2020 with now, what we find, as of April 2023, 114 countries are exploring CBDC, and these 114 countries constitute 95% of global GDP. In May 2020, only 35 countries were considering a CBDC. And out of these 114 countries, 60 are in an advanced stage. So they have done with the the preliminary stage, which is the research stage, where they are just mulling the pros and cons of issuing CBDC. So they are done with that stage. They are in an advanced stage, which can be either development, pilot, or launched. So 60 countries are in that stage. If we look at the G20 countries, because we know India has assumed the G20 presidency. So if we talk about the jurisdiction of the G20 countries, we see that 18 of the G20 countries are in the advanced stage. That is, again, either they are in the, of those 8 countries are in the pilot stage. So the essence of this this slide is that the acceptability of CBDCs, at least to experiment and to at least look at the pilots, to experiment the pilots of CBDCs, it is gaining traction in the recent 2-3 years, particularly after COVID, and also after the in the context of the Russia-Ukraine war, where countries have been subjected to sanctions. There are financial sanctions on Russia. There are sanctions on some of the other countries earlier on. So in that context, many countries are exploring CBDCs as a mechanism to sidestep the sanctions. So that is also one of the important motivation that we are seeing in the recent past, particularly last year, 2022. We saw acceleration of the acceptance of CBDCs. So there are 9 cross-border. So here we are talking about cross-border CBDCs. So where 2 countries amongst themselves are exploring the possibility of either trade or transactions through wholesale CBDCs. So either wholesale CBDCs or retail CBDCs along the cross-border platform is gaining traction in the last year. So it has doubled. The number of projects on cross-border platforms have doubled from 2021 to 2022, mainly accelerated by due to the sanctions on some countries. So again, we just present in a tabular form the status and use cases. So we are on the column side, we are looking at the status, that is either the projects are launched or pilot, development, research, inactive, or cancel. And then on the rows, the horizontal side, we are looking at the use cases. That is either they are issued in the form of a retail CBDC or a wholesale CBDC or both, or undecided. So overall, there are 11 current CBDC projects that have been launched, and of those 11, all 11 are retail CBDCs. 18 are in the pilot stage, out of which 6 are retail, 4 are wholesale, and 7 are both. So in this way, we can analyze this table. Basically, most of the CBDC projects are either in the development stage or in the research stage, where the countries are exploring both the retail as well as the wholesale applicability of CBDCs in their countries. So let's look at the motivations to launch CBDCs. There are various motivations in different countries, and some of these motivations are very interesting. For example, in Sweden, they have launched something called e-krona, which is a name for the Swedish CBDCs, because there the country is facing with a dwindling usage of paper currency. So in order to popularize a more acceptable digital form of currency, the central bank has issued e-krona. So in some countries, CBDCs are being issued because there's a dwindling usage of paper currency. In some other countries, like in Denmark, Germany, Japan, and US, there is significant physical cash usage, and therefore, to make it more efficient, the countries are issuing digital currencies because physical cash has its own set of costs, and to make the system more efficient and more innovative, there is greater emphasis on digital currency. In some other countries, the objective is financial inclusion. Particularly, there is a very important example which is called the Sand Dollar project in the Bahamas, where the country has a lot of islands which are sparsely located, and the population is located in remote areas where it's not possible to have either the ATMs or even paper currency. So there they have launched Sand Dollar as the digital currency. So there the motivation is to promote financial inclusion because the location is such that it's in a very remote area. So in order to promote payment, they have launched Sand Dollar. And some central banks position the CBDCs, the need for CBDCs as an alternative to cryptocurrencies. Even in the Indian context, we have seen a lot of speeches. We know that the RBI governor, the RBI is vehemently opposed to cryptocurrencies, and they have positioned digital currency as a safer alternative to cryptocurrency. Now, it may or may not be true depending on the risk appetite of people. It is true that CBDC is a legal tender, so it is safer. But those who are not treating cryptocurrency as a legal tender or as a currency, but rather they are treating their cryptocurrency as an asset, for them, cryptocurrency and CBDC may not be comparable, because CBDC is a currency, whereas cryptocurrency may be an asset which will generate returns just like shares, bonds, equity, etc. So in that context, many people have raised this concern that it's not appropriate to have a one-on-one comparison between cryptocurrencies and CBDCs, because the aptitude is different, the risk profile is different. One is a currency, one can be treated as an asset where you are investing, you are willing to take more risk so that there is a greater possibility of returns also. So it's just like a share or gold, which are various kinds of assets for investment. So in that context, CBDCs and cryptocurrencies may not be one-on-one comparable. But yes, some central banks have positioned that they are issuing CBDCs so that they want to wean away people from private cryptocurrencies. What are the motivations for issuing in India? And these are very aptly discussed in the RBI's concept note, which was released in October, November. One is to reduce the cost associated with physical cash management, because when you are issuing physical currency, there are various components of costs. There are costs related to printing, storage, transportation, replacement. And if you look at the annual report of the Reserve Bank of India, these costs add up to as much as at least 5,000 crore. So that much cost would be saved if there's some part of the digital, some part of the legal tender is replaced by digital currency. Second motivation is again to promote digitization, because even though we have made rapid strides in the field of digitization. Still, the usage of cash remains prominent. And if we, one very important variable to look at this is the currency in circulation. And the currency in circulation has seen an increase since COVID, because as a precautionary motive, people want to hold cash. So the usage of cash remains prominent, particularly for small value transactions. So even though the usage of cash from the time of demonetization, we have seen that it has come down, but it still remains prominent, and particularly for small value regular transaction, people still prefer to use cash, and to provide them a safer alternative, CBDC is touted as one of a mechanism. And the RBI believes that if reasonable anonymity is assured, there could be a shift from cash to CBDC. Because what is the advantage of cash is that it is providing anonymity. So if some level or some degree of anonymity is provided for, say, some threshold of transaction, then people would be more incentivized to move from cash to CBDCs. Then another motivation is to support competition and efficiency and innovation in payments. So it's not expected to take over the existing payment option, but to provide another payment avenue. And here, one of the very important reason that the RBI is mentioning is that, with the CBDC, because it is a central bank issued currency, the credit risk and the settlement risk is not there. The kind of risk that may be present with the bank deposits, that you are converting bank deposit into cash, there is a remote possibility that the bank is not solvent, there is a run on bank, you may not be able to get your convertibility at ease, an eased convertibility from bank deposits to cash. But that kind of a thing that kind of a risk does not arise with the central bank. So central bank reduces the cost of settlement because it is issued by the central bank itself. So the need for the payment infrastructure does not arise in this case. So that is one of the important reasons advocated for issuing of CBDCs. Then we talked about the use of CBDC for cross-border transaction, because if we look at some of the recent discussions, cross-border transactions have become costly. There are various issues involved. There is a difference in time zones involved. There is a high cost involved, exchange rate considerations involved. A lot of intermediaries are involved, and there is a lot of time that goes between finalizing the cross-border transaction. So to address some of these issues, CBDC is considered as an alternative. But again, very important point is that if we want to use CBDC for cross-border transaction, that design feature has to be ingrained at the initial phase itself. It's not that CBDC has been issued and then later on we are thinking that, okay, let's have another use case, which is to have ease in cross-border transaction. That's not possible. If we want to have cross-border transactions, application of CBDC, it has to be, that feature has to be a part of the CBDC at the early stage of issuance itself. And then financial inclusion. Now, for financial inclusion, very important part is that CBDC should have the offline functionality also. Because when we are talking about financial inclusion, we are talking about people who are living in a remote area or internet access. So in that case, the usability of CBDCs breaks down. So then what one has to do is one has to talk about having introducing an offline feature of CBDCs. And many countries are looking at this option. So what they do is that there is a preloaded smart cards where some amount of currency is already loaded, and when the internet access is restored, then there is some coordination done so that it matches with the ledger, the blockchain of the central bank. So this is something that needs to be developed or worked upon more to ensure that CBDC fosters financial inclusion. And this is something that a recent speech by the central bank deputy governor has also talked about, that, fine, we have done the pilots of wholesale, we have done pilots for retail, but now the next step is to look for offline functionality of CBDCs. So that is important. Another important use case of CBDC is that, because it is linked to blockchain and there is a ledger, what you can actually do is that you can introduce some conditions-based payments. So particularly for MSMEs, this will be a very important application, because we know that MSMEs face lags in payment. They have done the delivery, but they do not get the payment. So there could be this conditionality introduced in the smart contracts of the ledger, that as soon as the delivery is made, the payment should also be made. So that can be done. It can also help in improving the effectiveness of the various government schemes to reduce the intermediaries. So definitely there is a lot of potential for CBDCs, but the technology needs to be upgraded to an extent that one can introduce these kind of special features where conditions-based payments are to be made. Once that is done, CBDCs holds a greater potential than the existing forms of payment infrastructure. So moving on to the design features. One element of design feature is wholesale versus retail. Retail CBDC is available for use by all, whereas wholesale CBDC is restricted to only financial institutions. So like banks, when they are making interbank payments, that is, if CBDC is only restricted to interbank payments, that is called wholesale CBDC. Whereas if it is applicable to all of us, consumers, businesses, then it becomes a retail CBDC. In India, first, the pilot for wholesale CBDC was introduced because the RBI wanted to check some limited use cases of CBDC. But the next month, the retail CBDC pilot was also introduced. And if we look at the concept note of CBDC, there are some very interesting use cases that can have a very important, that will help in lowering costs if CBDC is used, particularly for transactions in government securities, because we know that banks among themselves, they transact in government securities, banks and RBI transact in government securities. Government security is used as a collateral for taking loans from the central bank through repo transaction. So in all these kind of transactions, the CBDC can be used for transactions involving government securities, for secondary market transactions and government securities. So there, the use case of CBDC is very promising. Also for retail CBDCs, also we now know that RBI and the government has announced allowed retail, like people like us, also to invest in government securities directly. So when we can invest directly in CBDCs, that can again be through central bank digital currency. And that will reduce the need for payments via the settlement via the bank platform, or it will help in what is called bypassing the bank account route. So in that sense, the time will be reduced, the cost will be reduced, the settlement risk will be reduced. So definitely there are a lot of use cases of CBDC which are promising. What is required is a greater discussion of these use cases, greater emphasis on educating the common people, the stakeholders, particularly for retail CBDCs. Then very important is this design feature. So one form of CBDC is whether it is retail or wholesale. Another is whether it is interest bearing or non-interest bearing. So now if CBDC is interest bearing, that is, if you are holding CBDC, you can get interest on it. And if you are not getting interest on it, then it is a non-interest bearing CBDC, just like holding cash. Now, interest bearing CBDC has a lot of implications for the banking sector, because then CBDCs come in direct competition with bank deposits. And we know that in a monetary policy transmission, the first point of impact will be on CBDCs. So there will be a greater transmission of interest rates to CBDCs rather than bank deposits. And then bank deposits will have to compete with the CBDCs. They will also have to, for example, if the Reserve Bank of India raises repo rate, the CBDCs will be, the interest on CBDCs can be raised faster. Banks will take some time, there are a lot of frictions and costs involved. But if there is already an interest bearing CBDC, then banks will also be, obliged to increase interest rates on their deposits because they are competing with an interest bearing CBDC. Now, when they have to pay more on deposits, they will charge also more from interest rates. So if they have to offer higher interest rates on deposit, that will increase their cost of funding. And for that, they will also charge higher interest rates on loans that are given to businesses and people and so on. They may also then get involved in some risky activities like investments in corporate bonds and investment in other risky investment avenues so that they generate higher returns. So that becomes costly for the bank's balance sheet because banks are considered to be inherently safe and they have to manage their asset liability profile. They have to avoid what is called an ALM mismatch or asset liability mismatch. But that could be a possibility if CBDCs are interest bearing. Also, if banks face liquidity crisis because they have to offer high interest rates on deposits, then their reliance on central bank funding will also increase. Like what we saw during the recent US banking crisis, the central bank had to open various windows to provide liquidity support to banks because people were just withdrawing their deposits and banks were facing liquidity crunch. So that kind of a situation, that similar kind of situation may arise if CBDC is interest bearing. And therefore, the RBI has already provided this indication that CBDC in India is going to be non-remunerated. So that way, the intermediation function of the commercial bank would not be impacted much. And generally, what the RBI said is that the issuance of CBDC is going to be least disruptive. Whatever design features they choose, whether it's going to be wholesale or retail, interest bearing or non-interest bearing, token or account based, any kind of change that they are making is going to be, it should be least disruptive so that it doesn't harm the existing infrastructure. So we are not having interest bearing CBDCs as of now. We will have non-interest CBDCs as and when it is introduced. Also, when we talk about CBDC, it's another policy decision that the central bank has to take is what will be the proportion of currency that will be issued in digital form and what will be the proportion of currency that will be issued in physical form, because you cannot have both at an explosive rate because if your liability side, because on the liability side is your currency, both in digital form and in the form of notes. So if the liability side expand, then the asset side will also have to expand. And on the asset side is the investment by the central bank. So the central bank would have to buy more government bonds. So those things have to be taken into account, how much expansion of the RBI's balance sheet the RBI is looking to do when it is issuing CBDCs, whether it is issuing CBDC over and above the existing stock of physical currency, or is it reducing physical currency by some amount, 50%. So that all those policy decisions need to be taken into account while issuing CBDCs. Forms of CBDCs. So another feature of design is whether CBDC will be issued as a token based or as an account based CBDC. Token based is again, it's a bearer instrument. It is issued in the form of a digital token representing a claim on the central bank. So it will be like a banknote, but its form will be different. It won't be a physical banknote, but it would be a digital token, which will be a claim on the central bank. And all these, it will be the entire trail of transaction will be saved on a ledger platform. Either it will be on an encrypted ledger, or it will be on blockchain. So the entire chain of transaction of a digital token has to be seen, has to be shown through a technology, which is either blockchain or other kind of distributed ledger technologies. So that is token. And the other form of CBDC is account based, where we all will be required to maintain accounts with a central bank. So the transaction will happen between my account and your account. So central bank would hold accounts for users of CBDC. So, but out of these forms, whether token based or account based, the central bank prefers to use token based CBDC. So there will be some intermediaries who are called TSP, token service providers. So the central bank will give the responsibility of issuing tokens to these token service providers, who will again be banks or some kind of like primary dealers we have in the case of government securities. So they will be responsible for issuing token and for the distribution of tokens for retail transactions. In any case, whether it is an account-based or a token-based CBDC, a lot of legal amendments would be required, and also one needs to see the anonymity consideration. So the level of anonymity will vary depending upon whether it's a token-based CBDC or an account-based CBDC, because in token-based CBDC, the level of anonymity will be lower. In account-based CBDC, the level will be higher because the identity of the account holder needs to be established. Whereas in token-based CBDC, only what needs to be established is that that token is genuine and it is authentic, and it is not some kind of a fake token. So both designs will have their separate legal consideration and will require amendment to the RBI Act and other payment-related legislation. For example, if RBI chooses to go in for a token-based CBDCs, legal amendments will be needed to issue currency in general, because right now the law specifies that the currency should be left more general, so that then you can introduce the form of legal tender. So what does RBI prefer? RBI prefers a fixed denomination retail-based token CBDC. So, and the last form of distribution of CBDC is whether it is a direct CBDC model, which is also called unilateral, or whether it's a two-tier CBDC model. So what is the difference? The difference is on the basis of how intensive is the role of the central bank, how involved is the central bank in the transactions pertaining to CBDCs. In the unilateral or single tier, the central bank is responsible for all activities. There is no intermediary. So the central bank carries out all the functions in the payment system, from issuance to interaction. So central bank is involved in all activities, whereas in intermediated or two-tier, as we discussed, the central bank is responsible for issuing. However, the interaction with the end users, like people like us, the interaction, we will not have direct interaction with the central bank, but we will have interaction with the RBI licensed intermediaries, and the central bank would regulate these intermediaries. Now, within this two-tier model also, there are two forms. One is indirect model and one is hybrid model. Indirect model is that the central bank issues CBDCs through intermediaries, and then the entire, the claims by consumers is handled by the intermediary. Whereas in the hybrid model, again, the claims are managed by the intermediaries, but the RBI maintains the ledger of all retail transactions. So a fallback option is always available with the RBI to intervene. It is a bit of a more complicated model, and therefore what RBI says is that they will go with the indirect model, where the issuance is the responsibility of the Reserve Bank, and then the dealing with the retail consumers is managed by the intermediaries the issuance of tokens, the management of the trail of transactions, it is all left to the intermediaries. So RBI has proposed to adopt the indirect model by creating and issuing tokens to token service providers. So just in summary, the preferred design choices, though we have discussed all the design choices, the preferred design choices is that RBI would like to go with both wholesale and retail, because there are some very promising use cases with the wholesale transactions also. Then it would like to go with intermediate model where central bank issues and distributes it for retail use. The distribution is the responsibility of intermediaries. In terms of whether it will be interest bearing or non-interest bearing, it's going to be a non-interest bearing CBDC, so that all that implications on the banking sector can be avoided. It will be a wholesale, will be an account based, whereas retail will be a token based. And there will be kind of what they have used the term managed anonymity, so that physical cash, it is as close as possible to physical cash. So it is just one point that we have taken from the governor's conversation, where he's talking about some of the examples or some of the advantages also of using CBDC, because CBDC. So what is the difference between CBDC and UPI? CBDC will have the advantage of sweep in and automatic sweep in and sweep out. So user can draw CBDC, put in back in their account. So if they have excess currency and they don't need it. So these are the kind of additional features that will be will be ingrained under the CBDC model of retail CBDCs. Cost we have already talked about, which is the second bullet point, that it will help in reducing the costs of printing, distributing currency, the paper currency. And third advantage that the governor is talking about is about international transaction, where CBDCs would be used for cross-border transaction. We'll come to that in a bit. We have 2 more slides on cross-border transaction. But this is a very important slide, because here the governor himself is listing some of the advantages of CBDC and also some of the advantages over the UPI. So he's saying that UPI is a means of payment, whereas CBDC is a currency itself. It's like cash having some ingrained advantages. Again, the advantages will depend on whether these features are actually part of the the issuance that is made, this automatic sweep in, sweep out. People will understand the technology or not. So we are still some time away from fully applying or fully using CBDCs. But yes, there are some promising design features which, if implemented, can revolutionize the payment model and the payment infrastructure. We have 2 pilots. We have the wholesale pilot and the retail pilots. The wholesale pilot was introduced on November 1 for, again, as I said, wholesale is for interbank payment. So it was for the settlement of secondary market transactions and government securities. Retail is something that is was introduced on December 1. And here, again, in the form of through intermediaries, it was introduced for transactions amongst retail people, having the same kind of features, like it's not interest bearing, it is convertible to other forms of money, but it was applicable to only a closed user group of participating customers and banks. And they are going to expand this closed group of customers and merchants, so that the applicability can be tested on a wider scale. Regarding the international experience and offline functionality, as I mentioned earlier, the use cases or the applicability of CBDC will enhance many-fold if the offline functionality is introduced in the CBDC design feature. For example, in UPI, they have introduced a design feature which is called UPI 123 Pay. Similar kind of functionalities needs to be introduced for retail CBDC, so that even if for some time there is no access to internet, CBDCs can be used. And this is something which some of the other countries are also exploring to further enhance the applicability of CBDCs. RBI has recently, for cross-border also a lot of steps are being taken, and RBI has recently signed a MOU with the UAE on exploring the interoperability of CBDCs with the UAE. These are all part of the various steps that are being taken to promote what is called the local currency financing and local currency trade. So as part of that overall ecosystem of promoting local currency, this UAE has also been signed to facilitate cross-border CBDC transactions, particularly for remittances and trade, because we have very strong trade relations with the UAE. India is an oil importer. So if we are able to enter into and streamline this cross-border CBDC with UAE, this will open doors for having cross-border transactions in terms of CBDCs with other countries also, and will help in facilitating what is called the local currency financing, use of the rupee. There are some other policy decisions that have to be taken along with it. For example, till now rupee is not fully convertible. It is only partially convertible. So the capital control decisions also have to be taken into account when we are moving towards a cross-border CBDC transaction. So those are some of the steps that need to be decided, but at least a lot of statements are being made, a lot of steps are being taken to explore the possibility of using CBDC for cross-border remittances and trade. And lastly, we talk about one model of cross-border transaction, which has been successfully piloted at the BIS, Bank for International Settlement. Why we are doing this is because, particularly for India, cross-border transaction is a very important use case. And domestically, yes, CBDC can be used, but if we are able to pioneer the use of CBDC in cross-border transaction, it will help in reducing cost, it will help in reducing logistic costs, and promote international trade and payments using CBDC. So this is just one example. This figure just shows the kind of frictions and the multiple players that are involved in the cross-border payments as of now, where we have between the payer and the payee, there are different intermediaries, the originating bank, respondent bank, and the correspondent bank and receiving bank of the payee. We have unclear foreign exchange rates, different opening hours, communication standards are different, fees are different. So the RBI has also raised this concern regarding the transaction fees are very high, particularly for retail customers, it's very high. So there are reasons to move to at least explore the use of CBDC for cross-border transactions, because there are lots of costs and frictions involved in the existing arrangements for cross-border transactions. So considering taking cognizance of these costs, an Enbridge platform was launched in 2020. So a number of central banks of countries like Hong Kong, China, UAE, Thailand participated in this pilot to assess the application of CBDCs in cross-border payments. So of these 5 countries, 20 commercial banks participated in cross-border payments, and they were involved in 2 kinds of payment. One is payment versus payment, that is, an importer of one country and an exporter of the other country. That kind of a transaction is called PVP, payment versus payment. And the other is where 2 banks are making transactions, which is related to foreign exchange. So what does it involve? It has a very important role of the central bank, because the central bank is issuing CBDCs. So there are 3 broad steps involved here. Firstly is the issuance of CBDC by the central bank to the domestic commercial banks. And then now the commercial banks are holding CBDCs. They will then have transactions with the commercial banks of their corporate clients in the other countries. and they will make payments either in the form of payment versus payment or for foreign exchange. And here the role of central banks and the functions of commercial banks are very important. So particularly for mBridge, they had introduced certain restrictions that central banks will be the only entities who will be responsible for issuing and redeeming CBDCs and providing fungibility. Central bank will have the power to issue limits that, how much they want to convert their monetary base, the reserve money which the central bank has, how much of that will be translated into digital currency, because they don't want to have some kind of a run on money or some kind of capital controls, evasion of capital control. So to avoid all those, some kind of checks and balances were introduced within the framework. But in essence, what it means is that the central bank will issue CBDCs to commercial banks, and then commercial banks of the two countries will transact on a common platform which is powered by the blockchain. Now, commercial banks can request for issuance and redemption of CBDCs in exchange for a debit or credit of their reserve account, because we know that commercial banks maintain reserves with the central bank. So the central bank will take their reserves and will provide them equivalent amount of digital currencies. So there are two legs of transaction between central bank and commercial bank, and then with the commercial bank with the commercial bank of the other country. So these are the various legs of transaction. It's a very useful project, and it has a lot of learnings for any central bank which is looking for issuing or using CBDCs for cross-border transactions. They have a lot of concept notes and papers that are given in visual forms also for people to understand what is the power of the central bank, what is the role of domestic commercial banks, how it will happen, and so on. So it's a very useful project. And now good thing is that more and more central banks are joining this project so that they can also test the applicability of this project for cross-border transaction. Now, last, I'll just take 2 minutes to talk about two recent experiences of two, three countries that have gone ahead of India in issuing CBDCs. One is the experience of Bank of Korea. Now, this is in contrast to India. Bank of Korea went in for retail CBDC only, and they had these 4 lessons. They say that we need to manage various, like we had this concern earlier on in the discussion, that we need to balance the various trade-offs between the various goals, and DLT may not be the appropriate technology. So there is need to think about new technology. It is much more complex than anticipated. So it is not easy just for a central bank to safely ensure the issuance of CBDC, management of CBDC. So what is important is the third point, that there needs to be effective public-private partnerships for CBDCs in the early phases itself, because by itself, the central bank may not be the most appropriately placed to manage all the elements of CBDCs, which involves, compliance with the various existing rules, regulations, KYC, DLT mode, and etc. So that is the role, that is some of the learnings from Bank of Korea. And last is Nigeria. Nigeria is one country that launched a CBDC called e-Naira in 2021. But till now, the uptake has been very poor, because one of the reasons is that people do not still understand the advantages of CBDCs, and they do not know the difference between the e-Naira, which is the digital currency, the ledger, and also cryptocurrency. So they do not understand. They treat them as one-on-one, and as a result, the uptake of e-Naira is very limited in Nigeria. In fact, in October, the government and the bank started giving some discounts also, so that it should improve the uptake or the applicability of CBDCs. But again, what they found is that the people used it only to the extent of using the discounts and coupons, and beyond that, they did not use CBDC. So that is something that any country needs to be aware of, particularly in India, where financial literacy, access to internet, psychological advantage of using cash, physical currency is still very prominent. All these learning experiences are very important when we take that plunge. And the last is again offline functionality. While it is easy to say that we will issue smart cards, some preloaded currency with smart cards, again there can be this risk of illicit tampering with the devices. There could be counterfeiting and so on. So all the technologies needs to be very robust to ensure offline functionality. And unless offline functionality is there, it's very to foster financial inclusion remains a pipe dream unless and until the offline functionality starts gaining prominence in the realm of CBDCs. Thank you.
Thank you. Thank you so much, ma'am. That was a very detailed presentation. Can we have questions from the audience? Dr. Gauri, there are some questions, I think, in the chat box. Will you be able to take it up?
Yeah, this is from Karthik Raghav to everyone. Which company selects for technology and legal partners for the CBDC project in India?
The RBI will select the technology and legal partners, and they have been doing a lot of projects on this. They have been exploring the possibility of issuing using blockchain versus other forms of DLT. So that is still in progress. So if you look at the concept note of CBDC, it's very as of now, it's very sketchy on the technology related details. But what we do know is that RBI is engaging with a lot of technology experts to understand the technology implications so that the rollout of CBDC on a wider scale can be without much of frictions.
There's a question from Mr. Nagapan, our president. How come anonymity is maintained while it may have a trial?
Trial. No, so okay, so we were talking about, so you are right, anonymity is not maintained in that sense, but here what we are referring to is a comparison between anonymity for a token-based CBDC versus an account-based CBDC. So in case of a token-based CBDC, anonymity is slightly on the higher side. It's possible to retain anonymity as compared to an account based, because there you have to show that, okay, this is my account I am holding, and therefore I am transferring my transactions. Whereas in the token base, it's more closer to cryptocurrency, where there is a ledger, whereas in cryptocurrency it is a decentralized ledger. Here it will be a centralized ledger, but in terms of having relative anonymity will be, it will at least accord some anonymity as compared to an account base, where you have to prove that you are the person who is holding the account of CBDC.
So there's another question. Yes, sir. Shabir sir is former president.
Yeah, I have a question. See, when we have when we have an account with the bank does KYC regularly. So then we have to fulfill that, otherwise the account gets blocked. What is the thing that, suppose if we have this digital currency with the RBI, and RBI formulates rules now and then and makes it stricter and stricter to comply with the thing. So, I mean, during that time, would they block our account and make our digital currency not usable by us?
Yes, so right now, if you see the concept note, they say that they are going with a token-based CBDC, not with the account-based CBDC, to precisely avoid this kind of problem where they keep changing. If they change the rules of KYC, or they change the compliance norms and so on. So they are not going with the account-based CBDC to avoid a very direct linkage between the central bank and the retail customer. What they are going to do is have a token-based CBDC and involve a lot of intermediaries. And through the intermediaries, which will again happen to be banks only, through the intermediaries, the transaction and the KYC will happen. So that will be relatively much smoother than having the central bank being involved in each and every element of discussion or decision making.
Token based will be a better option than the account based, right?
Yes. So and that is what the central bank is saying, that they'll go for token based, because this is least disruptive and it's more closer to the current arrangement, where what we do is we have a currency. So in that case, we will have digital tokens in our wallets rather than having an account with the central bank. And it will also be managed by something called the token service providers, who will be licensed intermediaries by the RBI.
I have a couple of more questions from participant. CBDC or the native assets of a blockchain, am I correct? One person has asked. And CBDC value will also differ day to day as other coins like Bitcoin or anything.
No. CBDC will be a currency, just like, yeah, it is just like our currency notes and coins, but only thing is it will be held in the digital form. And that is why it is different from private cryptocurrencies whose value is very volatile. CBDC is not volatile. It is
okay, it's
central bank issued digital currency. Yeah.
So our chairman of this committee, Swaminathan Iyer, has asked a question. Dear Madam, how to calculate M3 money supply in CBDC and also effect quantitative easing when the economy requires it?
Yeah, so see, M3 is what it is, currency in circulation plus bank deposit. Again, the currency in circulation here in this case will consist of currency in the form of banknotes and coins and tokens. So again, the currency in circulation will have two components. And again, as I mentioned in one of my slides, that this decision has to be made by the RBI, that how much will be issued in the form of currency notes, how much will be issued in the form of token, so that the entire M3 or the reserve money does not explode. So that proportion distribution has to be made. And as of now, there is no policy decision on this, because right now they're still in the pilot stage for testing the application. After that, when it is rolled out on a more wider scale, then the question of M3 money, absolutely correct, and the reserve money will come into picture, because then they have to decide, because in M3 you have bank deposits also, the time deposit. And again, if it is interest-bearing, then time deposits will suffer, because there will be migration from time deposits to currency in circulation. So the formula will remain the same. It's only that in the currency in circulation, you will have two components, the physical as well as the token, digital.
Madam, do you think the quantitative easing would be much easier in a digital currency?
Absolutely.
Yes.
So, there is a very important paper by the Bank of England particularly on this issue, where they say that, one of the advantages of issuing rollout of CBDC will be that monetary transmission will be much more easier. Whenever the RBI raises the repo rate, the transmission will be much easier. Whereas in the case of commercial bank, as of now, we have seen that RBI has raised the repo rate by 250 basis points, but the deposits have been raised just by 100 basis points or 125 basis points. So transmission will definitely be much more easier. But again, then the question of whether it will be an interest-bearing or non-interest-bearing CBDC comes into picture.
This is exactly right.
So those are the trade-offs. Those are the trade-offs that the central bank has to manage.
I have just two more questions before we conclude. CBDC can be obtained only in the name of individuals, or it can be obtained as company assets. That's from Aarti.
It can be both. It will have to be, for example, if it is wholesale, then it will be only financial institution. Whereas in the case of retail CBDCs, it is just understand it like any currency like rupee, it is just like it is just the form is different. It will be held in the form of digital nature rather than in the physical form. Rest, it will not have any, the nature will not change.
Okay. There's the same question from, I mean, like same person has asked one more question. According to City report, by 2030, the growth of blockchain will be measured in billions of users and trillions of dollars, driven by the adoption of central bank digital currencies and tokenized assets. How CBDC will affect or create the future employment for Indians?
That again, it depends on what technology is being used, how technology intensive. It will definitely create more employment for tech companies because the central bank will have to engage with a lot of tech companies to ensure rollout of CBDCs in different cities, particularly in small cities, to train or educate people. So definitely educational institution, universities, tech-oriented companies, they will have a larger role to play. But overall, on the future employment for the Indians, that again depends on the technology rollout. But if it will help in generating more employment for the tech-savvy Indians or the more skilled Indians, definitely that it holds more future there. It holds more promise there because the central bank, through its various intermediaries, would have to engage with technology players to ensure that it's rolled out smoothly across the country. Because India is a large country, there are remote places also. So the role of these tech companies will be extremely important going forward. So in that case, there is employment potential for those kind of people who have tech orientation.
Thank you. Thank you so much. Can we conclude the session? May I now invite Dr. Gauri Ramachandran, Chairperson, Banking and Finance Committee, to propose a vote of thanks.
Share here, and with a very quick, within that 45 minutes, you were able to give us a glimpse about how it's going to work on a macro level. And I think it requires a lot of advocacy, practically how one has to do it from the layman's perspective, and a lot of pictorial things. Who will do the advocacy portion of it? Like UPI has just made a revolution. Now this CBDC has got to have, whether the token-based system or whatever it is, to make it available to the consumers to the extent what they understand easily. So which will be the advocacy partner in this case, you feel?
So central bank will have to engage. Central bank will have to engage with commercial banks. They will have to engage with a lot of local players. They will have to engage with smaller banks, the local banks, the cooperative banks, to ensure that the people in the various parts of the country understand, and they understand it in that particular language. So local orientation is very important. So you are right. So we are still some distance away from a full rollout. What is important is to understand each and every, at least understand the design features, and these kind of advocacy events are very useful. And also to have more kind of interactions with understanding what other countries are doing and what are the problems and challenges they are facing before going whole hog on announcing the full rollout. Because as I mentioned, unless and until the offline functionality is also put in place some form, it will not have a very deeper impact in the remote areas where internet access is a problem. So all those things need to be taken care of, and also how much the RBI is thinking of diminishing the use of cash, because cash is still very relevant. So all those policy questions also need to be taken into account.
Okay. So the experience, whatever the other countries have got that with e-Naira, and with other countries which has experienced the the pain points, if we can just address it
Yes.
to our consumers, then
Our situation, yes.
yeah, correct. So there's a lot of appreciation messages to you, Dr. Radhika ji. Wonderful session and very excellent insight on CBDC, and articulate and insightful. And
Thank
so
you.
now it was a real good thing. That's what I just said. It was like a very complex subjects. You just made it into a capsule form and given to us for us to at least have a macro picture right now. So that if it comes to Chennai, then how will we be able to do it? first the thing is, the psychological aspects of it, the fear of doing this. See, we are now comfortable with the plastic currency, with the GPay kind of stuff.
Right.
And now we have to move on to the CBDC. So it all depends on first warding off the psychological things and making
Right.
advocacy and the design features and other things. As we keep doing it, there's a lot of things will crop in and all those will have solution, I guess. So with 35 countries considering CBDC and out of G20, 18 countries, we have made the pilot, and that's a proud moment for India.
Yes.
And so there was a motivation issuing the CBDC in India. So generally we are for digitalization and digiting thing, and so we take a step forward into that being a largest democracy with a lot of demographic dividend on our side. So it all look, the one thing what I just felt was, for cross-border transaction feature, do it early stage of issuance, later on it can be done.
Right.
So that is really, like somebody fails to do it in the beginning, then how will they come? There has to be a recourse for it. And then educating the stakeholders, what you mentioned in one of the slides was really very relevant. And the advantages of UPI versus CBDC, that was going on with many people in the forum who were all attending. I think you had given a good answer for it. And offline thing and convergence of offline and with this CBDC on the token-based system and mobile to mobile, how the transaction, the safety, what is that? It has not been leaked out to many people, and then other aspects of it, the pitfalls and all, how it will be taken care as we go on. And if you have any news or anything, whichever cities which is already used, if they had the relevance, maybe with the selected group they have done it, if it has a good response or how is it, do you have any idea? If so, you can share it with us. So with this very nice presentation we had, and it was a wonderful capsule. We have got it to chew it, and then now you have given a thought for us to think and act on it, and we'll come back to you. Any queries, we will just email you through Secretariat, and we'll come back. Thank you so much to our President, to Secretariat, my Chairman of this committee, Swaminathan Nair, and Co-Chairman Shyam Sekhar, though he is not able to be here, and he has been listening from somewhere. He is in outstation still. And so all of us are all there to get this program done, and the efforts of everyone is acknowledged over here. And thank you so much for all the participants, and that to the mid time of this 3:30. So like we've just made it, and thank you so much once again to that Pandey.
Thank you.
Thank you, ma'am. Thank you so much.
Thank you.
Thank you, one and all.
It is an excellent program, madam. Thank you.
Thank you.
Yeah.